Hi everyone, welcome back to Financial Freedom Friday. My name is Nate Scott. It's great to be here. We're going to talk about tips and strategies on these videos that hopefully will help you achieve financial freedom. Today's discussion is going to be about something that if you've been around living well for any period of time, or if you will be, it's kind of a buzzword, you'll hear it quite often, and that is the idea of recapturing money. Now, in most people's financial situation, there are two main ways that mainstream ways that people will try to improve their financial well-being. So one of the ways that many people hear that they can do to improve their financial well-being is just start saving more money and live on less. Save more, live on less. That is not the most exciting way to do it, but it could probably work. And the other idea is, okay, I've got my savings, I don't want to change that, but I want it to do more for me. So what do they tend to do? They say, I need to earn a higher rate of return on that money, which normally means you have to take more risk. And not everyone is too excited to take more risk. So while both of those options can definitely increase your chances of reaching financial freedom, there's kind of a third option that goes under the radar for the most part. And that's the idea of recapturing that I feel is very important. So that when I say recapturing money, what I really mean is, and what I'm talking about, is trying to find ways to recover money that's transitioning out of your life in one way or another. And so bringing money that's just leaving back in and using that money, if it's possible, to increase your wealth. So one of the first things that we do when we're thinking about recapturing money is one of the main targets we have is recapturing debt. So if you have third-party debt and payments are going out to them, we can plug that hole and start, without having to take any risk or change your cash flow, you can redirect money to come back in and actually earn interest and dividends for you. And so that's really what we're going to talk about, is not having to take any additional risks like most people would have you do, or change your cash flow. In other words, live on less money and save more. Those are okay options, but I would like you to be able to do exactly what you're doing, live in the same lifestyle, and maybe even reduce the risk you're taking and still improve your financial well-being. And that is through this concept of recapturing. So for example, we're going to say you're a normal average family, okay? Maybe you have some credit card debt, maybe you have a couple car loans in the family, some lingering student debt, you might have a mortgage, most likely have a mortgage if you're listening to this. And we're just going to put a blanket number on this. We're going to say you're paying on the non-mortgage debts. We'll deal with the mortgage later, but the non-mortgage debts, the cars, things, maybe $1,000 a month total. A couple hundred on the credit card, a few hundred on the cars, and maybe a little bit on the student debt, and you're paying $1,000 a month, and you're trying to save money. So the conventional wisdom, which I would kind of point you away, so instead of following the conventional wisdom, which is max out the 401ks, max out the IRAs, and the problem with that is that we can't use the money, and so they would just say keep paying the car loans, pay the credit cards, and pay the student debt with this money, and take all your savings, which is essentially what they're telling you to do, take all your savings and max out your 401k and IRA, don't touch it. Well, to do that is okay, I guess, but the problem is that you don't have access to the money, and the only way to improve your situation is to take more risk or to start putting more in. And so what we'd like to do is show you how to, maybe instead of putting the money there, change where you're putting it. Let's say a banking policy like we teach all the time. And so instead of directing money to those places, we start saving money into the policy with the goal of using the policy to take over the debt we have. So as we're building up this policy, it's increasing its cash value. We start taking cash value from the policy, borrowing it out, and we take over the credit card. And the credit card payment now can be redirected back to you in your policy. And that's building the policy faster now that you have more money going into it without changing your cash flow at all or taking any risk at all. And so then we have enough money to take over the car loan, and then the next car loan, and then the student debt. And now we have $1,000 a month that used to just be earmarked to go out of the family is now coming back in. You haven't had to change your cash flow or change your lifestyle at all. And you're still hopefully actually reducing your risk by doing this compared to what you're doing. So you're not taking on additional risk, you're not changing your cash flow, but now you have this stream of money. Not only are you still saving money, but you have this $1,000 a month that used to be payments that now is acting more like savings because it's going back into the policy to earn interest and dividends in the policy with no risk at all, really. And that's what we're trying to teach people to do. The power of recapturing is using money that used to be leaving your pockets to earn interest and build your wealth for you, instead of just hoping to get a high rate of return elsewhere. And that's the power of recapturing. If you want to learn how to make high rates of return, that's great. But at least you should do is have a foundation where you're recapturing all the money that normally is leaving the family. So remember, if you don't build your financial freedom, nobody will. So let's get to work. We'll see you next week.